Hello traders, I'm Ziad. I trade multiple markets, but mainly gold and Egyptian stocks. Sometimes American stocks too, but not really. Not really active, I mean. So I just published Formula 7, and it's actually my personal formula. So it's not one of the formulas that you'll see on the market. It's actually a very advanced formula that accounts for probability and expected loss and expected gain, then uses or subtracts the expected loss from the expected gain and gives you this indicator. So multiple stuff here, and um, you're gonna like it because it's actually a hesitation free indicator. So as you can see here, even if the signals are wrong or not good, which I'm gonna teach you how to evade that soon, but even if the signals are wrong or noisy or whatever, it's not gonna repaint. So you have confidence, and I can guarantee you this indicator is not gonna give you a lot of noise. So how are the signals accounted for? It's very similar to MACD, but it's not the same. But it looks the same, and it kind of has the same mechanism or the way you take signals from it, but it's not actually the same. And if you actually compare them, you'll find that my indicator is much more sensitive and much more precise. And for that sensitivity, I'm gonna teach you how to use my indicator to actually beat the market or increase the odds of you beating the markets. So as you can see here, we have the indicator, which is a histogram in blue, a signal line, okay, and the signals here, red and green, of course, buy and sell. So it's currently very simple, the signal, but in a few days it's gonna look much better, but it's very functional anyway. So the way to use it, actually, if you don't use, I'm gonna show you why do I use a moving average and how to actually set it up. Okay, so that's the indicator properties. As you can see here, you can enable divergence signals, which is if you understand trading or if you're an old trader, divergence, you're gonna understand it. It's very easy. And if you're a beginner, divergence is when the price and momentum or my indicator goes in opposite direction. So that's divergence. Okay, so we can use a scaling factor, which I don't advise here because in here it's actually good. It's not so bad. But if you use scaling, if you want it to be, for example, like 50 and 150, negative 50 and 150, I mean. The look back period is like, it's the slow period. As you can see, it's for the histogram. And the signal period, I used 21. I think these are the optimal parameters. You can tweak it. The bigger, the better, of course, since especially if you use smaller time frames, 5 minutes, it's gonna give you less noise and much more efficient signals. And as you can see here, we look for 55 bars for divergence. So maybe in the previous trend, there was a high that will diverge or that will show a divergence signal 55 candles later, you know what I'm saying? So that's why I used it to be a little bit to the past and further than the look back period of my indicator, because my look back period will only explain the momentum, but or that will show you an optimized result of the momentum. The more you expand, the less signals you get, of course. So the way to actually do it is to add a faster indicator. So for example, here I'm just gonna add moving average. I advise between 9 and 14, so I'll just use 9. As you can see here, I'll add an arrow for every signal I see to explain. Okay, wait. Yep. So as you can see here, my indicator gave me a signal here in this candle, and with a moving average confluence, and it actually shows me that the price is testing this zone actually. And with the momentum as a down momentum signal, you have a very high probability trade, right? Let's see in another example, maybe in a faster trade, so, or a smaller trade. As you can see here, there's a signal. This trade lost money, okay? And actually it lost money, and if you didn't use the moving average, you wouldn't know that it's actually very slow. So there is no momentum here, so you can't use momentum as a signal unless there is actually momentum. Here, when it broke down, it's on a it's on a support level here. So when it broke it, that signal and my signal with the moving average, it's a very high probability trade. So when you pair it with it, and you pair price action, moving average, and you use it as a confirmation or momentum indicator, here as you can see, it's very noisy. Very noisy. So we don't trade in noisy markets. That's why the moving average is very important. As you can see here, there was a downtrend and a signal here. Okay. And another one next to it. So when it gives you two signals in a row and you see the momentum slowing down after it was trending, that means that trend is going weaker, and the lower or the tighter the price moves, it means there's an explosion coming. So the momentum was downward here, but then an explosion of volume happened here. For whatever reason happened, because of course I don't recall what happened on that day in that exact timing, of course, but news or whatever, it actually got it. So I don't think it's actually a bad indicator. As you can see here, it gave me a signal, and the momentum started going up with the histogram here. So, and how you can use the bar is coming up, but I'm just explaining the signal here. So that's the going up signal or the green signal. When you pair it with the moving average, it accounts for divergences. Of course, just add support and resistances. Like, I'll just add randoms here. That's not accurate, so don't use it. Don't use the same numbers because it's not real. But I'll just move it a bit further. Okay. And see there, 500, 550. 550 is, I think it's more relevant in this chart. So yeah, combining price action with moving average. I don't know what happened to my indicator right now. Yeah. It slept, I don't know. So support and resistance, as you can see here, with the moving average and my signal, it just shows you, or it filters out a breakout from a fake out. You know, it's a great filter that if you combine it with a very basic strategy like support and resistance and moving average, it's gonna give you good signals. And as you can see here, you could have made like 2 trades, 3 trades in this downtrend, as you can see here, and there was one, but it was very slow. I think you were gonna break even on that. That's why the moving average is important. As you can see, volume is important, candle length is important. in trading, there is no magic indicator. I'm just gonna give you an extra probability of edge. I hope you actually like the indicator. I'm gonna upload more videos the more I understand this indicator, and the more I get like experience and data from it. And before I end, because I almost forgot to explain the bar graph. So the bar graph, of course, if it crosses up, it's a upward momentum. If it crosses down, it's a downward momentum. So in order to use this as signals, as a signal line or alone, it's terrible and it's not very accurate. So that's why I just added an extra filters of divergences. If you want to use it, you can use the average, like the signal line I have right here, and when it like breaks through it, it will give you the same signal as you can see here. So if it gives you like a break, the same as the moving average here, if it gave a breakout of the or a break of the moving average, it's a nice signal that you can use. Anyway, so that's how you trade the Formula 7 indicator, and I appreciate the downloads, I appreciate the comments. Please review the indicator after you use it, and I'm pretty sure it's gonna benefit you. Please don't forget me in your prayers, and see you.